The dollar is lower against the euro for a second day. Our next guest says the greenback won't find a sustainable bid until Fed Chairman Ben Bernanke raises interest rates. Keith McCullough is CEO of Research Edge and a former portfolio manager at the Carlyle Group's Blue Wave hedge fund. He's been hammering home his concerns that the U.S. fiscal and monetary policy will lead to a currency crisis. He's back with us now today to discuss how investors can capitalize on this. Research Edge, and there's also Edge Holdings. There's a hockey connection there. We're going to get to that in just a minute, but let us talk first about the dollar. Keith, it is great to have you back. I know you've been golfing in Scotland. I myself have been on vacation.
Thanks,
Glad to have you back here. Let us talk about the dollar, though, because you, as we point out, have been hammering against the dollar for quite some time. For a little while there, though, the market was going against your bets, and the dollar was actually performing quite well early June. But since we've seen that stock market rally, the dollar has taken another nosedive. But the question I have for you is this. Isn't your view somewhat predicated on the performance of the stock market? It seems that the dollar only goes down when the stock market is going up, and nobody believes that the stock market can go up forever because corporate profits still have a ways to recover.
It is based on that. It is based on the fact that the stock market is a leading indicator, not the Fed Chairman's outlook. So we're always looking to Mr. Market to have some kind of a forward-looking indicator. And you've just had, a 7% move in the S&P in a month. You've had a 48% move since March. In the context of that, you've had the dollar drop 12% with equities up. So again, it's very simple. I think in this situation, it's completely socialized and politicized situation. A monkey could make money in this market. If the dollar goes down, everything's going to go up. If it stops going down, everything's going to stop going up. I think that's it.
So is it 100% about risk appetite?
I don't think it's about risk appetite as much as it is people understanding that there are rules here that are in place that get you paid no matter what happens. So, as long as Bernanke does not move on interest rates at all, rhetorically or physically or in any way, shape, or form, you will get paid buying things when the dollar goes down.
And you think that's likely to happen? Bernanke stays quiet for a while.
He will, because he's in a political box. I think he's going to be in a political pickle jar come the fourth quarter, because you're going to see inflation shoot up sequentially. You're going to have GDP numbers that are going to blow the minds of people on consensus. Right now in consensus, GDP people think might be up in the low single digits. People are scared to go there, like they're scared to be long stocks. I think that GDP is going to be up 3 to 6% in the fourth quarter and maybe in the first, and inflation will be up 1 to 2%.
But what happens if the stock market rally runs out of gas?
Yeah, if the stock market rally runs out of gas, you can always, by the way, cut interest rates. So I'm talking about raising interest rates.
How can you cut from zero?
No, you can raise to 25 to 50 beeps and then cut. I mean, we can't be in the situation of perpetual zero.
Even in this political climate, though, Keith, even with the fact that Bernanke has, 6 months left?
Yeah, again, job security is a very forceful type of a leading indicator for him.
Nothing focuses the mind like a hanging?
Yeah, exactly. Like in the Old West, there's nothing like a good old hanging that can focus the mind. So, and I agree with that. He's looking at his job security. He's looking at history books that scare the living daylights out of him. And in many ways, his history lessons are a metaphor for what he really is, which is, I think, a face of fear at the bottom, just as much as we had a face of greed at the top. You cannot freak out at the bottom like we did and talk about a Great Depression. That is almost the most ludicrous assumption. We're nowhere near a Great Depression at this point.
All right, Keith, we really do need to talk about the dollar more, but we have to make a transition to hockey. This is going to be a bit of a curveball to mix metaphors for our viewers. It is July 31st, but you are the guy behind Edge Holdings. This is one of the last two bidders for the Phoenix Coyotes, the other, of course, being Jerry Reinsdorf, owner of the Chicago White Sox. What on earth are you doing bidding for a hockey team?
Yeah, at the bottom of a cycle, if your call has been that the bottom was on March 9th, which ours has been, you should be looking for distressed assets in some of the most distressed parts of the country that have a demographic bent to them. Phoenix is one of them. And Wayne Gretzky is the man in Phoenix, and I will say the best player of all time. So we think it's a distressed asset and a great part of the cyclical, type of investment idea, and it's getting really interesting.
I mean, we do need to remind our viewers, though, that you're not just a distressed investor, you're a bit of a passionate player. Here, you're the former captain of the Yale hockey team, a good Canadian boy who's been playing hockey since he was just a little wee one on the blades. But what is it that you think is going to make your bid successful versus the one that Reinsdorf has on the table?
I think we have a business process, and we have both the combination of people who played hockey and people who know how to run businesses. So I think that that's just it. We're not looking to arb a financial situation here, trying to buy somebody's debt at cents on the dollar. We actually have a 3 to 5 year plan coming out of an economic cycle in an area that we think is opportunistic.
But there are some interesting aspects to this plan. You want to play some games either in Saskatoon, you want to play some games perhaps in Halifax. What's the sense, though, in taking games away from Phoenix to kind of make this whole effort successful.
Yeah, people in Phoenix don't want to go to a hockey game anyway, so you might as well bring them to Canada where people will go bonkers to watch a hockey game. 5 games in Canada to us is very interesting. You can sell out an Islanders preseason game in Saskatoon, for God's sake, so you can end up with a very interesting situation where demand is outrunning supply, and that's what you always want in an economic situation.
All right, Keith, it is great to have you back. I wish you luck in your efforts to buy the Phoenix Coyotes. That is Keith McCullough, CEO of Research Edge. He's the guy behind Edge Holdings. We're unmasking him here on Bloomberg Television.